Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, Netflix wins the bidding war for Warner Brothers Discovery, at least for now. How this huge deal will play and pay out with CNBC's own reporting, thanks to Andrew Ross Sorkin.
My sources this morning are now saying that Paramount had bid $30.
And thanks to David Faber.
It's an enormous premium that Netflix is willing to pay here, 85% of it in cash.
We're doing the transaction math for shareholders.
Do they value the enviable margins? Is it back to content as king?
The power of intellectual property with a very plugged-in Hollywood journalist, Matt Belloni.
I don't think Netflix is buying Warner's for the stock value. They've got that. What they need is to grow subscribers and to grow the overall audience.
Plus Hollywood's reaction.
The industry is not excited about this. I mean, my DMs and texts blew up last night with some pretty dour messages.
And one of the biggest questions hanging over it all, how Netflix and Warner Brothers Discovery might win over regulators.
It's not just in the context of streaming itself, but to look at it in the context of time spent online, eyeballs and the like.
It's Friday, December 5th, 2025.
It's like an episode of Succession.
Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin.
Making some headlines, though, right now. Here's the big news. Warner Brothers Discovery has reportedly entered now exclusive deal talks for sale of its movie studio and HBO Max streaming platform to Netflix. Reports say that a deal could come soon. CNBC was told another round of bids from the companies interested in Warner Brothers assets was due yesterday. Netflix, Paramount Skydance, and CNBC parent company Comcast have been vying for all, or in some cases, parts of the business. And now Paramount recently questioned the company on how it was conducting its sales process. CNBC reported yesterday that Netflix was in the lead for Warner Brothers, and it's believed to be have an 85% offer in cash. Appears to be higher. Unclear whether Paramount, Joe, put in a breakup fee that apparently is higher on the other end. Right. So, there's, and really the whole question, I don't know if it's the whole question, but a big part of the question is what does this regulatory environment really look like? Which deal would get approved? And not just which deal will get fought. In most cases, both deals are going to get fought, not just here in the United States, but likely in Europe and by states. Almost across the board, there's going to be...
Paramount keeps pointing out that Netflix got major problems in Europe.
But there's going to be problems for
Paramount.
For all of them. And the question is, who can get through that gauntlet, and what does that look like on the other side for shareholders?
Zaslav supposedly prefers Netflix, but I bet it's more money because Paramount is sticking to the notion that we can do this so we don't have to pay as much.
Right. No, that's part of the...
if they get it,
but it's also not the whole company. It's hard to compare the deals, right? Because you're talking about part of the company versus the full company.
In the Netflix case, it appears that it's a higher bid just for the streaming services. So then it's that plus. Whereas in the case of Paramount, it appears that they have a lower bid for the entirety of the whole thing. It may only be off by $1 or $2, but that's the game here. It's how do you then decide from a regulatory perspective what's going to happen here. But I do think you may be right. Maybe David thinks about Netflix as a better. If you read some of the descriptions and you talk to some of the people around it, they talk about Netflix as a steward of these assets in a different way than they think of Paramount, for example.
But if Paramount knew that they had the administration on their side, it wouldn't matter what breakup fee they were offering, because they know that they could almost have a wink and a nod to be able to get it done.
But as Andrew points out, it's not just the Trump administration you got to get past.
Right.
We've got some news.
Well,
we're going to go to literally
Warner
right
Brothers,
now.
The shares are halted. Warner Brothers Discovery shares are halted. So I don't know. It could.
I think you're here.
It's out.
I think we've been waiting for it.
Press release is out.
Press release is out. And let's explain to the public what's happening here.
Not the biggest secret in the world that Netflix.
Netflix is the winner.
Is the winner, and the deal's done apparently at this point. and the details will be forthcoming, and we'll see whether regulatory muster becomes a problem. I know that at least Warner Brothers is halted at this point. I figure Netflix probably is at this point. Let's see, following, it will be after, obviously, the separation of some of the cable.
Well, you have two deals going on here. So you have
that one happened.
Netflix is going to be buying the streaming business.
$27.75 a share. It says cash and stock for
$27.75, and most importantly, on the regulatory side of this deal, if you're looking, the breakup fee is $5.8 billion.
More than.
So people have been discussing
Paramount.
How regulators would think about this transaction.
Right. Equity value $72 billion. Total enterprise value, $82.7 billion at this point.
That's with the debt piece of it.
That's with the debt.
Right.
It is one of the most storied, Warner Brothers, one of the most storied studios and entities in Hollywood, obviously. And it culminates, I guess, with Zaslav able to deliver, I guess you would say, to shareholders at this point of Warner Brothers, a heck of a lot better than $12. Or $11 a share.
Given where it had fallen to.
Given where it had fallen to.
The big question on the regulatory side is going to be, the argument effectively here is that if you look at the Paramount transaction, that would have effectively taken out a studio, right? In this case, you're not taking out a studio. That's a big part of the argument. The other argument that Netflix is effectively going to have to make, and Time Warner is going to have to make, or I should say Warner Brothers is going to have to make effectively, is to argue that it's not just looking at the marketplace in the context of streaming itself, but to look at it in the context of time spent online, eyeballs and the like. You're going to have to effectively include YouTube viewing and Amazon Prime and so many others, so that you're not just looking at the paid streaming business. What you looking at there?
I'm looking at the cash component is $23.25. $23.25, $4.50 in the shares of Netflix common stock. That comes up to 27.75. There's collars on the shares. This is going to be a complex.
It's going to be a complex deal. And by the way, this is going to be in the regulatory mix for a long time.
It could close in a year and a half. That's what I think they would hope that it's able to close. Mm-hmm. Does Zaslav run Warner Brothers, the studio?
I'm trying to look through this to find
Max?
out. What I also don't know is, and this is where the next piece of this comes. Does Paramount try to go hostile? Is there some other element of this that could happen? I don't know. Wow. What do you think regulators do? Jason Kilar, who ran, I should say, Hulu for a very long time, came out last night. I don't know if you saw the quote. He said, "If I was tasked with doing this, I cannot think of a more effective way to reduce competition in Hollywood than selling WBD to Netflix." So there's going to be a lot of consternation in Hollywood. By the way, there would have been consternation whether it was sold to Paramount or to Netflix, but clearly there's going to be lots of disagreement about, who should be the owner effectively of this asset. But it does appear that Netflix is now going to be the owner, at least going to attempt to be the owner, and that Warner Brothers Discovery's board has decided to take that bet and to take that bid.
Hey guys, it's probably worth taking a look at shares of Netflix just longer term on this, because it's a market cap of about $438 billion. It's the media company that has been the darling of the street. It's off its 52-week high, which was $134.12. 103.22 is where it closed yesterday. But you're still talking about, if you look over the last 5 years or even the history of the stock, that was an all-time high when it was sitting at those levels. It has done very well, particularly relative to some of the other media companies. And you wonder what wrapping this in.
We should point out that they get $2 also approximately from the spinoff of the linear business. So if you want to actually add in, it might actually
add that back in. Yeah.
Come to $29 to $30 in terms of what.
And this is what David had said. David Zaslav had said from the beginning he wanted $30 a share,
and it looks
and
like
this is
effectively.
Arguably a $30 a deal share,
yeah.
if you believe that the spinoff ultimately captures the $2. That $2. Let's get Faber on the phone, because he's calling in right now. Hey, David.
Yeah. Hey, Andrew.
Tell us what you know.
Well, you guys obviously have the terms, I guess, at this point. And listen, I mean, the price itself, you have to just step back for a second and consider. because $27.75, $23.50 of it in cash, and then the rest in stock that's going to be collared is quite a number. And remember, it's for the studio and streaming business. So in addition, because they've reversed the split, there will be a remain co that will trade publicly called Global Networks, made up of all the linear cable networks of Warner Brothers Discovery. That will also have a value. Maybe it's $2.50, maybe it's as much as $4. Put it all together, and you do end up with a value of at least, let's call it, over $30 a share. And don't forget, guys, for a stock that was trading at about 11 or 12 bucks before all this started. So it's an enormous premium that Netflix is willing to pay here. Much of it, as we said yesterday, as I reported, 85% of it in cash. And as you were just talking, though, and has come up numerous times in my reporting, of course, as well, is the question of antitrust and whether, in fact, this is going to be something that can get past the regulators and, of course, Donald Trump as well, given you are putting together the number 1 and number 4 streaming companies in the world. And that will continue to be a key question. There is a $5.8 billion reverse break fee, meaning that if Netflix is unable to get to the finish line, $5.8 billion will go to Warner Brothers Discovery. But many shareholders will argue that's not enough to compensate for what could be a very long process that could still end in them not owning the company. We just don't know. We'll have to wait and see. But a stunning outcome, Netflix clearly showing that it was very much determined to own this business. And again, guys, I'll defer to you as well and your thoughts. But you know, Netflix pursuing this so aggressively, you wonder what of its shareholders will question whether, in fact, what it was seeing that made it want to go down this road, given its multiple to earnings, has been the envy of the media business for many years. Is it putting that multiple at risk?
Right. So, David, a couple of things. You know, as I was talking to folks around this transaction yesterday, you know, we've heard and there's been reporting that Ted Sarandos had been down to see the president in the White House, that they felt, I don't know, some assurance that they could actually move ahead with this deal. In part, by the way, my understanding is because CNN and the linear channels are not part of this, and that potentially that might allow, you know, or this administration might look more favorably on this deal because it's not thinking about some of those linear businesses. I don't know if you think that's true. And whether you think that the real impetus for this is that actually so much of the library programming that Warner Brothers has lives or has been sold to Netflix, and they wouldn't have access to that in the future. And the idea that they could actually take down material costs, given that they would obviously now own HBO.
I think that's all true. I mean, I think your reporting on Sarandos and the president is important because, again, that goes to that key question. And as we know, the president ends up being a key decision maker in so many of these kinds of things. There had been a perception, of course, that Paramount had a much easier path. And I said this many times. First of all, given they were paying a number for the entire company. And secondly, but not less important, that they had a very strong relationship, was believed, Larry Ellison, with the president, and therefore would have an easier go on the antitrust front. When it comes to what Netflix gets here, you're absolutely right. The library is certainly one of the key things. They no longer measure this company in terms of subscriber growth, right? It's simply time spent. How much time is our audience with us? And with the ad business as well, an important component of their growth plan, that library is going to be key, and franchises they're going to be able to bring over, and not to mention the HBO shows and things like Game of Thrones and everything else. I continue, though, you know, but you've got to remember, Andrew, if they're no longer buying that programming, so to speak, they're keeping it for themselves, it's sort of a wash. And, you know, there will be a question as to whether or not that's really going to contribute to any real growth for the company. There may have been a significant threat if Paramount in particular had bought the company that they would no longer have access to certain programming that obviously is very important. And as you guys well know, they don't own a lot of their own IP, which is something David Zaslav will tell you so many times, and that's a key consideration one would have to think for them as well.
Why didn't Netflix just buy this instead of Discovery a couple of years ago, basically getting everything but Discovery, sort of, right? And then,
I don't know. Why didn't Paramount buy it, Joe, like when they, instead of been, you know, or David Ellison and Larry Ellison, why didn't they just step up and try to buy this thing when it was $8?
And who's going to pick over
I think it speaks to the changes.
The assets.
Yeah. That's a good question. Look, one thing I think this does kind of speak to, though, is that constant fluctuation in what the market values. Do they value the enviable margins that David was pointing out that Netflix has before, or is it back to content as king, and there's only so many of these content places to go around? It's probably noteworthy that Paramount Skydance shares, at least until just a moment ago, we're off by even more than Netflix. The idea that they might miss out on this asset, so they're down by 2.33%. That's not a concern about overpaying that's reflected there. That's a concern about there's only so many of these assets to go around, and you have to have that content and you have to get bigger. So I think it's that constant battle that we've seen play out over the last several years in the market over what investors are going to value at any given point.
You know, Becky, as well, I mean, you're right. And I wonder whether this will usher in another round of consolidation. Because, to your point, Paramount was looking at the possibility of $6 billion in synergies from putting these businesses together. Those are huge, obviously, cost synergies. And giving it the scale at its streaming company, Paramount Plus, to really compete globally. And so, you know, you have to wonder, they've done better than many had anticipated, at least the last quarter, in terms of where they came in on EBITDA versus, of course, a promise that was far above that some time back. But that said, you know, the opportunity here or the miss is a significant one for Paramount. They competed very aggressively here. As you know, they started all this off. They made 5 bids. Remember, 3, of course, before the auction began, and then 2 more. I think they were contemplating, I have to find out from reporting, going as high as the high 20s, maybe even to $30 a share. Much of it financed with Larry Ellison's fortune. And yet the choice here, apparently from Warner Brothers, was to go with Netflix, despite, again, what we will come back to numerous times, being that risk in terms of what the regulatory front will look like for the company.
Okay. David, I want to thank you for calling in with all of the latest.
Tease will be next.
Next on Squawk Pod, the streaming match of the day, month, decade, even lifetime. More on Netflix is next. But the deal isn't done yet. Will Paramount Skydance owner David Ellison give up so soon? Media watcher Matt Belloni, founder of Puck, joins us.
This is a once-in-a-lifetime opportunity to own a Hollywood movie studio, and if the Ellisons' entire game plan is to own Warner Brothers and Paramount and maybe a piece of TikTok, and that's the plan, maybe it's worth paying that kind of fee to come in over the top.
Plus comments from Netflix's co-CEO, Ted Sarandos. This is Squawk Pod.
Up and Becky, Q.
You're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. Our top story this morning, Netflix announcing that it has reached a deal to buy Warner Brothers film and streaming assets. The cash and stock deal is valued at $27.75 per Warner Brothers share, although there are some other things that could go along with that, too, that could boost that price. Warner Brothers will spin out its TV networks, including TNT and CNN, into that RemainCo called Global Networks. That acquisition is expected to close after the separation takes place, which is now expected in the third quarter of next year. Joe?
Very good. All right. Let's bring in, talk more about that, Matt Belloni, founding partner at Puck. And I was talking about this earlier, Matt. Thanks for joining us on quick notice. We got a lot of questions, obviously, but here's the quote that I had when the letter Paramount basically sent it to Zaslav, saying, look, you have abandoned the semblance and reality of a fair transaction process. Now it's done, and I mean, does that mean, are they coming back?
They basically laid the groundwork there to claim that this was an unfair process. So maybe they'll sue, maybe they'll go directly to the shareholders, say that this is not the best deal. We could have offered you something better. We were cleaner. We were going to take out the entire company. Now you've got to go through with this entire split. And much more uncertain than what they were offering, they would argue. But they have not said what they're going to do yet. That's the big mystery today.
Because I don't want to say it's arrogance, but it's almost like they wanted everyone to just believe that they got the administration on their side. So they almost were, it was almost like a sense of entitlement that, look, you need to talk to us at 24, even if other people at 30, because they're not, we can tell you wink and a nod. We can tell you it's not going to happen for you with our connections with the administration.
I mean, that was certainly the messaging that was going out. I mean, they basically said that we don't believe the others can close. And they may be right about that. I mean, this is going to be a very difficult regulatory process.
You're excited.
For this transaction.
I can see it. For the next year and a half, you're like, ka-ching, you can't wait to watch this play out, right? We are kind of too. It's unbelievable.
It will be, especially when you inject the whole Trump of it all. I mean, I would not be surprised if the president weighed in today on this transaction. I mean, other Republicans have already been making noises about it. We saw Mike Lee, the Antitrust committee member, has already been saying he's going to look closely at this transaction. So there is messaging going on within the Republican Party about this transaction, and we'll see now if they act upon it.
Do you know how much the president would like Barry Weiss to be overseeing CNN? I mean, I would almost like to see that, to be perfectly honest.
Yeah, I mean, they certainly had a preference here. And, we'll see what Trump's willing to do. He may just say, you know what, I tried, we're walking away from this. Or the DOJ might come after this.
So, Matt, is there any chance in a million years somehow Paramount comes back and does something that we aren't thinking about right now?
Well, I mean, they first of all, they can go to the shareholders, or we don't know what the termination fee is, but they could go just say, we're going to pay whatever it is and offer way more money. I mean,
we do. $5.8 billion is the termination
fee.
Oh, we do.
It's $5.8 billion.
There's a reverse breakup fee of 5.8. I don't know if it specifically in the terms talk about that in the context of somebody else coming in or really just the regulators blocking it. But right now, 5.8 is the figure that's been put out there.
That's pretty big. But, this is a once-in-a-lifetime opportunity to own a Hollywood movie studio. And if the Ellisons' entire game plan is to own Warner Brothers and Paramount and maybe a piece of TikTok, and that's the plan, maybe it's worth paying that kind of fee to come in over the top.
What about Comcast?
It's interesting. Comcast, I have not heard that much about what their offer was. There was a whole scenario, sort of a conspiracy that people were talking about how the real plan was for Netflix to buy Warner and then sell HBO to Comcast. And I have been told by sources that that is not the plan. So I don't know what Comcast, what the role was here.
By the way, on Comcast, I keep thinking potentially that now you might see them trying to make a move maybe with a Paramount. I don't know what you do about the CBS, NBC of it all, or maybe go, as we talked with Greenfield, go to Sony, go to somebody else. But it seems like if you're not going to try to fight this, in City Hall, effectively, if you're not going to try to fight the Netflix deal, you might put up one or two other deals against it at the same time, and then they all sail through at the same time.
Maybe, although I think it would be tough to have CBS and NBC together there. And plus, I don't know that the Ellisons want partners on this. I mean, they seem to want to kind of go it alone, and they have the wherewithal to do it. I think if Comcast had a partner, it would be some kind of a big money partner, but maybe they'd go in with someone like Sony or something. I mean, you could see all kinds of scenarios here, sort of a free fall. It's like an episode of Succession.
I mean, media is not a zero-sum game, but we know what happened to Sherry Redstone. We know that Zaslav was looking at $7.50 a share at one point, and now he's getting 30. Comcast was a $65 stock. It's now at 27. I don't know what happened. Did it all flow into Netflix? And if so, if so, why do they want any of this stuff when all it's done is just drag down the valuation of everyone that's touched any of these legacy assets?
Yeah, I mean, I don't think Netflix is buying Warner's for the stock value. They've got that. They're the growth stock. What they need is to grow subscribers and to grow the overall audience. And they see the intellectual property and the library that Warner's offers as being pretty important. They know.
at this point, given everything, Zaslav is popping champagne corks, and so are our shareholders. Are they not at Warner Brothers, even though Warner Brothers Discovery, even though it's been a tough couple of years?
Yeah, I mean, I don't know if popping champagne is the thing. I mean, Zaslav, for sure. I mean, he's going to get paid. He's going to get whatever he wants. But, this is the fourth transaction that this company has gone through in the past decade. And every time they do it, they cut jobs. People lose. It's been very disruptive.
That doesn't even include Jerry. I mean, go back even further, and it's like, what? And that was what I said earlier. Too bad Netflix Discovery is like a middleman. Too bad Netflix just didn't do this.
A long time ago.
Yeah, with AT&T, if they were going to do it, but it would have cost more probably back then.
I have a different.
Hopefully, in 20 years, we're not talking about this like we do AOL Time Warner.
Well, and then sometime we got to talk about. I mean, not just us, but I mean, we got Versant's got all these things, and now we got all the stub of Warner Brothers. What happens to all? I think these are all really valuable little things. Who rolls all of those things up? Are they valuable?
Well, Versant says they're not really interested in adding more TV networks. I don't know if that's true, but that's what they're saying. They say they're happy with it. We're not talking about what's going to happen to these Warner TV networks, but this is going to be, if they go through this split, a separate company, and they're going to have a strategy and want to buy stuff and manage it. We'll see.
Matt, what does the Hollywood creative community think about this and how they think about the permutations of these deals? I remember we talked a couple months ago about how you thought actually Hollywood was quite excited about what Paramount was doing because they were spending a lot of money on programming, and it seemed like they were going to come in and do a lot of interesting things. Do you think the industry is going to look at this and say, this is great, they're going to revolt, they're going to think that this is going to lower the number of new productions, it's going to change the economics of these deals in different ways that make it less attractive, more attractive? How do you see it?
No, the industry is not excited about this. I mean, my DMs and texts blew up last night with some pretty dour messages, because anytime you take out a buyer in the entertainment ecosystem, it results in fewer opportunities. Now, Netflix would argue that they're going to be stronger and they're going to grow more and they're going to have more opportunities for talent to work on bigger and better projects. But the history of the business has shown that when you take out a buyer, you reduce opportunities. And then it just comes down to kind of a pride thing. I mean, Warner Brothers was one of the original Hollywood studios. It has a 100-year legacy, everything from Casablanca to Dirty Harry. It is ingrained in the Hollywood system. And now you have this interloper that has come in from Silicon Valley, and within 20 years, it has completely transformed the business. And now it's buying one of the preeminent Hollywood establishment studios. But so there's a weird pride
What key demos and what young people are, oh my God, I can't wait to watch Casablanca. This is a good point. Why is Netflix paying for legacy stuff when they really need to try to compete with YouTube on user-generated? How does this help them compete against user-generated content, and where all these young people aren't watching any of this stuff anymore?
That's true, but they are watching Ted Lasso, and they're watching, some of the newer stuff that Warner is doing. They're doing television and film, and they're making it with the IP that they have generated for 100 years. So there's real value there. And Netflix sees the data. You forget this. There are Warner Brothers movies that play on Netflix right now via licensing agreements, and they see what kind of engagement those movies deliver. And the big IP-driven blockbuster movies are almost always in the top 10 on Netflix. People go to these services and they watch these movies. It was true of cable television, and it's true of streaming. The majority of the viewership comes from these library titles. And if Netflix can own that and not have to license it from all these other companies, that's the missing piece. They have volume, they don't have premium, they don't have library. That's what this gives them.
Matt, I imagine we're going to be talking a lot more at a wild hour for you. So thank you for waking up early. We look forward, of course, to always reading your newsletter, and we appreciate you joining us.
Coming out soon.
Netflix co-CEO Ted Sarandos making comments on a conference call moments ago.
Our plan is to continue to operate the iconic Warner Brothers motion picture and television studios, including HBO and the theatrical film releasing. I'm grateful to David for agreeing to run the company until the transaction is complete. I know some of you are surprised that we're making this acquisition, and I certainly understand why. Over the years, we have been known to be builders, not buyers. We already have incredible shows and movies and a great business model, and it's working for talent, it's working for consumers, and it's working for shareholders. But this is a rare opportunity, and it's going to help us achieve our mission to entertain the world and to bring people together through great stories.
My sources this morning are now saying that Paramount, in the last go-around, in the last 24 hours, had bid $30 for the entirety of the business.
For the whole
For the whole business. Their breakup fee was $5 billion. So they had a lower breakup fee. But this is an interesting situation now, because if you start to think about what the board was considering in that moment, they were thinking, do you take $30 from Paramount plus the $5 billion breakup fee?
Cash.
I believe so. Or do you take this transaction, which effectively puts you at, call it $27, $28 in guaranteed-ish money? By the way, some of that's stock, obviously, and so you don't know what that ultimately looks like.
With the perception of much greater regulatory issues.
Potentially greater regulatory risk.
Globally.
But also potentially, and this is where I don't know where the board of Warner Brothers ultimately landed in terms of what the total they believe this transaction is worth. Arguably, I imagine they might believe this transaction is worth more than $30. Maybe it's worth $31 or $32.
They could say 34 with
if they believe that those linear channels. But there is this risk premium, obviously, between the $5 billion breakup fee, the $5.8 billion breakup fee,
and Donald Trump.
And there's always the Trump factor. So
President Trump.
The wild card in terms of how that interplays with all of this.
No, even if I were a Warner Brothers shareholder, I mean that would be information I'd like to know. What you just said, if we just can count on all that as absolute fact, it'd be like, well, can you explain to me why this is better than that?
And I imagine there's going to be lots of questions that are going to be asked by shareholders over the next several weeks about this deal.
Well, it's probably not over either.
And then the question is, does Paramount come back and do something else? I don't know if they could.
32, it should be done. Cash.
Well, and that's the question. Does Paramount come back and go direct to the shareholders? And that's what they would have to do. But then the question is, I don't know enough about the terms of how the breakup fee schedule works. If that breakup fee is just related to regulators, or that breakup fee is also related to an interloper, if you will.
And then I can get my wish, Becky.
Oh, that's a good question.
That's Barry Weiss running CNN. Then I could get my wish.
Yeah, I heard you saying that. It is interesting to watch Netflix reaction. Obviously, we're still in the pre-market, but originally Netflix shares were only down by about 1.5%. They are now down by about 4.33%. Maybe as some of these questions come up as people continue to mull this over, but you can probably anticipate there's going to be some volatility with these stocks as we wait to get more details, wait to see the reaction from other places and regulatory officials as well.
Stay tuned, huh?
Stay tuned.
We'll talk more.
Soap opera. The world turns as the world turns.
That was surprising to me what you said, though.
It surprised me when I
still
to a couple
thought
people this morning.
because my argument was they thought, I just had finished saying it, that they were arrogant because they thought we can say we've got regulatory issues in our pocket, so 25 is better than 30. If it's 30 with no regulatory, if they can really claim that they got a much better chance of passing the muster.
But then you have the 5.8.
Right.
5.8 is more than 5.
Right.
And if you think that both of these deals was going to have regulatory scrutiny on it, no matter what, you got to think it's not just what the Trump administration, the federal government think. It's about the states. It's, by the way, about what Europe will think. There's so many different constituents here.
The total value is 80. What enterprise value is like 80 billion. I don't think 800 million is that. You think that makes a difference? 5.8 versus 5 is.
If you think you're going to be stuck anyway,
maybe.
But if you think you're stuck anyway, I mean,
but you're not stuck with if you got the go ahead. You got the green light. If you got the wink and a nod.
That's the question, whether you think you got the wink and the nod.
I think that people can.
But what about, you're going to have states go after this?
Yeah, and
you're going to, as I said, this Netflix deal will happen.
Netflix has
issues
even
in Europe.
Bigger problems, right?
So
Nobody's
That's why I'm just saying I think that all of these things are going to be in some kind of regulatory purgatory for some period of time. There will be lawsuits, invariably. And so
yes, no matter what
the question.
happens.
If you're the board and you're thinking about, okay, I'm stuck for the next 12 months or 18 months anyway, which of these is the more valuable transaction?
That's the podcast for today. A very busy Friday in the newsroom. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC at 6 Eastern. To get the highlights from that TV show right into your ears, follow Squawk Pod wherever you're listening now. And leave us a review and a rating. It helps. We'll meet you right back here on Monday. Have a great weekend.
We are clear. Thanks, guys.